Welcome to Finance News UK, where we give you all of the stories you need to know about from the world of business, the stock market, and the metaverse, while also finding your favourite memes and giving you everything you don't care about all in one place. As always, lots to get through this week. Let's get straight into those headlines from the UK and around the world. Firstly, let's head east. This week, the Chinese property developer Evergrande, often mispronounced as if it's a Starbucks seasonal drink for Christmas,
the Chinese Evergrande
has officially defaulted on its dollar-denominated debt payments to bondholders. The troubled property developer failed to pay bond payments which were due last month, although the grace period ended at the start of this week, officially sealing its fate. The firm has debts outstanding of $300 billion, which is about what a seasonal drink from Starbucks would cost in the US in a few years' time if inflation continues. Fears of the default sent shares of Evergrande plummeting 20% on Monday. So far this year, the stock has lost 87% of its value, leaving the company stuck between a rock and a hard place. Both credit rating agencies Fitch and S&P have downgraded the company to restricted default because of the failed payments and failed efforts to let anyone know what the hell they're actually doing. In total, the company has $3.5 billion in US denominated bonds due. Watch this space to see what actually happens if there are any consequences. Expect plenty of YouTube videos with flames in the thumbnails and shocked faces. In other news out of China, foreign investors raised their holdings of Chinese government bonds in November at the fastest pace in 10 months. Official depository data showed on Thursday, supported by passive flows of the major index, began including the instruments. Total foreign holdings of Chinese government bonds stood at 2.39 trillion yuan at the end of November. Data from China's Central Depository and Clearing Company showed on Thursday. That was a record high and up 3.8% from the month earlier, the quickest monthly percentage increase since January. November marked the first full month of phased inclusion of Chinese government bonds in FTSE Russell's World Government Bond Index. Inclusion is expected to eventually drive $130 billion of inflows from index-related foreign inflows into the bonds over a 36-month period. Well, as long as they pay the interest on those bonds, everyone will be happy, so let's hope that investors know what they're doing. Now over to the good old US of A. Amazon has been fined $1.3 billion because it harmed competitors by favouring third-party sellers that use the company's logistics services. This was the ruling from Italy's antitrust regulator, who earlier this week delivered the damning verdict. The regulator said on Thursday that Amazon favoured sellers in Italy that paid it to use its warehouse and delivery services, including by making them more likely to appear as the default option or buy box when consumers click to buy a product. The fine of €1.13 billion is part of a wave of antitrust enforcement in Europe and elsewhere against Amazon and other big tech companies for allegedly abusing their dominance to squash smaller competitors. I'm sure Jeff Bezos will be crying himself to sleep this week. After all, when he makes around $1.8 million an hour, he can cover those costs in around a month and still have some left to pay for those Christmas presents. In the markets, the Santa rally could well still be on the cards if the charts are anything to go by. That's according to the host of Mad Money, Jim Cramer. The former hedge fund manager said earlier this week that the stars are aligning with the VIX, which is basically the volatility index, slowly falling, signalling that investors are ready to pull the trigger on further investment bull runs that we witnessed last week in the market. Even when the S&P's flat on the day like today, the VIX keeps going down rapidly. That tells us that traders are getting rid of their cash insurance, Cramer said, noting the VIX is really a measure of implied volatility for S&P 500 options contracts. Cramer went on to say lots of money managers like to use options to hedge their positions, and right now, the VIX is saying that they keep climbing out of their foxholes. So watch this space, guys. We might actually see a Santa rally rather than the kangaroo market that we had seen so far last week and this one. After all, Jim Cramer is famous for making really solid market predictions. Sticking to the US, Joe Biden's administration announced this week that new car purchases of gas-powered vehicles will be banned by 2035 as he gears up to make the government more green and promote the use of hybrid and electric vehicles. The US president confirmed that by 2027, the government's own fleet of vehicles, which currently stands at 650,000, will be emission-free by 2027, and then it's further aimed to be net zero by the year 2050. The announcement was welcomed by the Alliance for Automotive Innovation, a trade group representing General Motors, Toyota, and Volkswagen. However, make note that the order does exclude and make exceptions for military vehicles and space vehicles, in case you are wondering if you could still use the rocket ship that you just purchased. Don't worry, Elon, we got you. Biden didn't mention if the infamous Beast presidential vehicle, which weighs 7 tons and does a whopping 4 miles to the gallon, will be included in the announcement, although I don't think you'll see a US president driving a Nissan Leaf anytime soon. Heading home to the UK, the Bank of England will likely keep interest rates stable this year and look to increase them later than expected as we head into Q1. A Reuters poll across economists has predicted by a slim majority that a rate rise will be delayed until the start of 2022, rather than in December that had previously been anticipated. The economists surveyed expected the meeting on the 16th of December to end with rates being kept at their historically low levels for another few months, while the economy still tried to recover from the threat of the new variant of Omicron and the end of national lockdowns. Last month, the bank surprised markets which had priced in a rise by leaving interest rates on hold. Market pricing is now showing a roughly 50% chance of a move this month. In the December to 68th poll, 25 economists said bank rate would be left at the 0.1% next week, while 21 predicted a rise to 0.25%. In the November poll, the split was 26 in favour of a hike versus 21 expecting no change. Sounds like to me that they decided their vote based on a flip of a coin. I thought these economists knew what they were doing. Anyway, watch this space. I'll keep you updated on any shock moves that are likely to increase your borrowing costs. Taylor Wimpey boss at Peter Redfern is looking to stand down next year according to reports in the Times. The long-standing boss of the firm, who has been in charge for 15 years since the merger of Taylor Woodrow and George Wimpey, will step down, taking a career break. Redfern's decision to step aside comes days after Elliott Management, the activist investor, was reported to have built a small stake in Taylor Wimpey. He emphasised that this played no role at all in his decision-making process. He will stay on as chief executive until his successor has been appointed and expects to deliver the group's interim results in the spring and possibly the full-year figures next summer. Taylor Wimpey said the recruitment process is advanced and the board is looking at internal and external candidates, but one senior industry insider said that timing looks very odd. They added, "I think he's played into Elliott's hands." In preliminary results, Royal Dutch Shell shareholders on Friday voted in favour of a plan to move the company's headquarters and its tax home to Britain. Chairman Andrew Mackenzie announced the preliminary results with 57.9% of outstanding shares cast and more than 99% in support of the plan. The Anglo-Dutch company's board members presented the plan in November. They said the simplification would strengthen Shell's competitiveness and make share buybacks and paying dividends easier. Sounds good to me. The plan, which would see the company renamed Shell plc, losing the Royal Dutch title it had for more than a century, required approval from 75% of the votes cast at the meeting in Rotterdam. And finally, in my funny and good news story of the week, Hormel Foods, the company that produces the famous canned meat Spam, has reported record high results for the 7th consecutive year. The CEO, Jim Snee, told CNBC's Jim Cramer on Thursday that the demand for Spam is as strong as it's ever been. The company delivered results of $3.45 billion in revenue, beating Wall Street expectations. For the year, net sales grew to $11.4 billion, up a huge 19% from the year before. Just to confirm, that is not all in Spam, that would be crazy. They do sell other stuff. But in all seriousness, who is buying this stuff for their lunches? Unless it has a face of a bear imprinted in its processed goodness, this really is just not for me. Anyway, now it's time to look at the fails of the week, and just when you thought there couldn't be any Tesla news, I've got you covered. Just when you think it couldn't get any worse, fails of the week. Reuters reported this week that Elon Musk is thinking of quitting his job. The news agency took a look at the SpaceX boss's Twitter feed and decided it was definitely worth a story to clickbait readers into worrying about what the Doge father was going to do next. In his tweet, Elon Musk wrote that, "Thinking of quitting my jobs and becoming an influencer full times. What do you think?" The news agency said it was not clear whether the tweet was a joke or not. But then I suppose how can you tell these days? Anyway, I don't think he's going anywhere anytime soon. Moving on to the best from Wall Street Bets this week, and we've got some absolute crackers just in time for Christmas. Welcome to the best of the bets. In this first picture, this kind Wall Street bull is taking the old bear back to the living room to watch daytime TV after last week's complete flop of a stock market crash made a complete reversal, giving the bulls a much needed boost ready for the Santa rally. Bull market rally was established this week as CNBC used a picture of the famous Wall Street trader on their front page again. The now world famous Peter Tuchman in his self-proclaimed Einstein of Wall Street, the most pictured trader and general good luck charm. And finally, Elon's new haircut made its debut and was met with some interesting comments on this thread. Definitely rocking the Gary Newman Fifth Element vibes here. Short back and sides please mate, just leave the top on, I'm growing it out. Anyway, tune in this time next week for more market news just before we wrap things up for the festive season. If you want to watch any other episodes of Finance News UK, then just follow the card on screen to the Finance News playlist on my channel. Don't forget to drop me a big fat like if you found the video interesting, subscribe for many more videos. I'll see you guys in the next one, and always, happy investing, bulls.